Ladies and gentlemen, good afternoon and welcome all to the Concall Limited fourth quarter and FY2024 earnings conference call hosted by Asian Market Securities. From the management side, we have Mr. Shiva Kabra, Joint Managing Director, Mr. Jagdeep Parve, CFO. Now I would hand over the call to Jagdeep sir for his opening remarks. Post that, we shall open the floor for Q&A. Thanks and over to you, Jagdeep.
Good evening, everybody. I am Jagdeep Parve, the Chief Financial Officer of Concall Limited. Welcome everyone to the earnings conference call for the fourth quarter of the financial year 23-24 of Concall Limited. We appreciate that you have taken out the time from your busy schedule to attend this call. Mr. Shiva Kabra, the Joint Managing Director of Concall Limited, also joins me on this call. The detailed presentation has already been put up on our website as well as in the investor presentation notification on the exchanges for this call. Let me provide you some highlights of the performance of Concall Limited for the fourth quarter and also for the complete financial year of 23-24 on a standalone basis. First, let me speak about the revenues from operations. On a standalone basis, the revenue for the fourth quarter is approximately 98 crores, which is a very good growth compared to the Q3 of the last year as well, Q4 of the last year as well Q3 of the current year, which is approximately about 84 crores. On a standalone basis, the full year revenue from operations is rupees 344 crores. The corresponding figures for FY22-23 were rupees 291 crores. Pipes, food, cement, FMCG and beverages are our top 5 earning sectors. Our performance in the Q4 has been the highest amongst all quarters so far. On the expenses side, the cost of goods sold has remained more or less consistent between 40 to 41% of the sales in the fourth quarter. This is almost in line with the previous periods. However, we definitely look for improvement in reducing this with optimized buying strategies. Employee costs, depreciation, manufacturing costs and other expenses are incurred in line with the business operations. On the profitability levels, the EBITDA, PBT, PAT and EPS, excluding the exceptional items, have grown up by 23.6%, 23.4%, a negative 9.3% and negative 7.4% on a YOY basis. There exists a considerable scope of improvement due to higher revenues, obviously triggering economy of scale. We believe we have got a strong way forward. Our focused marketing plans will obviously result in increased sales. We've got diversified sales teams focusing on results. Install base is being increased, focusing on increased market share. There has been good traction in the track and trace and masks and safety products business. And mark-print technology will be used in Indian operations in the next year. With this, I am leaving the floor now open for questions. Me and Shiva Kabra will answer them.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. We will wait for a moment while the question queue assembles. The first question is from the line of Disha Sheth from Anvil Share and Stock Broking Private Limited. Please go ahead. Disha Sheth, may we request you to unmute your line from your side and go ahead with your question.
Hello. Am I audible?
Yes, ma'am. Please go ahead.
Yeah. Good afternoon, sir. Sir, we wanted to check that can you just give the details of what we have done from the company level to increase our sales force, because that's the main thing going forward. If we have more sales force, we can get more business. And in terms of margin, where is the more scope for improvement? And thirdly, our target for around 400 crore sales by FY25, are we on line to achieve that? So just 3 questions from my side. Hello?
Yeah, Shiva, you want to take this answer?
Sure. So just going back, the first question was on the sales force. So, we have an adequate sales force as of right now. There are a few additions that we are doing for some new business lines that we've added through acquisitions, both here and internationally. But largely, we've got enough salespeople, and it's about more efficient management, and running a smoother business as of right now. That's my own view, and we can increase sales quite significantly even with the existing base. We have, in my past on calls, I don't know if anyone has been available, but we have sort of over-invested in our sales and field service force, even though this year there has been an increase in people right at the end, in anticipation of future growth. So we try to keep, what we require for the next 1-2 years, because it takes time to hire people and train them. And of course, there's also an attrition at some point of time. So that's the first question on the sales force. The second question was regarding margins. So, our margins have remained quite consistent over a period of time on the COGS basis, like on the gross margins. And on the net margins, of course, there's some fluctuations as a smaller company, quarter to quarter, because of, some expenses being incurred in certain quarters versus certain other quarters. But I'll say, like, overall for our product lines and overall for our business as a whole, the margins are quite stable. Sometimes they might go down 1 or 2%, sometimes they might go up 1 or 2%. But that 60% plus range is obviously what we target, overall. And, obviously we do have some ideas on, projects to reduce cost. But, let's get that actually done and make sure it works before I say anything on that front. And then the third question was, can you repeat that again, please? What was the third question?
The 400 crore, are we on track to achieve?
Yes, I don't know what we did standalone this year, Jerry. I think it was like
343. Yeah.
343. So, yeah, we could, I can't say anything. Obviously, that was a forward-looking statement. Like I said, we don't make any predictions. That was a target, mandated by the board on a standalone basis. We might do it, we might not. I can't see anything. So again, that's a prediction for the future, But we are just focusing on, running day by day, month by month.
Okay. Yeah, no, sir, just on that, since we, for having the target in the mind, we must have sold the printers. So it's all about the consumer business. So that we can predict that, because 3 years we have if we sell a printer, 7 to 8 years, we have the fixed consumer business. So that way, I was asking.
Yes, of course, what we sold till last year, we can say that it was good till, last year. Till last year, we were on target, and this year, of course, we'll see what happens this year. So till last year, we were satisfied with the growth rate, and we were selling consumers at a rate which can afford us to continue growing, at least on a standalone basis, and that was on target last year, so to say.
Sure.
This year we'll only be able to see, 11 months down the line or something, find out. Yeah.
Okay, sure. So, and going forward, if we see coming 4 years, like if we want to grow 20%, what are the ingredients we need, like gaining market share and other things, if you can specify, what will help the company to grow and do we target to grow at 20%, because industries that we are serving are pretty much growing and there is now rural demand picking up, which will help the allied industries. So what is your view on that, if we see a little longer term of 4 or 5 years?
Yeah, so I think that, our industry growth rate is normally about 1.5 times GDP growth or manufacturing industrial growth approximately. So, I don't know, that would be like 11%, some 12%, something like that, is where the industry growth rate is. So there are a bunch of ways we can go faster. One is by going faster and increasing our market share. One is by adding some more products, and seeing if we can do better than that. And one is by looking at some newer geographies where we can expand our, sales of products to those places and to some subsidies. So we're working on those 3-4 different basis areas. The first, obviously, is to maximize our sales in India itself, because in the short to medium term, that is absolutely the most profitable extra rupee in sales for us, and then we're also working on some other things to grow faster. But there's no target growth rate. We have to see what comes to us and, make sure that it's in line with our business. And it's something that we feel in the long term, we can be profitable around it. We can maintain our margins. We can, do the type of products that are sort of compatible with what we do right now. Because we have certain lines of business, and then we have certain like technology or service type modes around our business. So, if we find things that are interesting to us and that maintain that, then it makes sense, Sure. And, we don't want to get into certain other areas which might give us the growth rates, but, might be much more cyclical or commoditized in that aspect, or competitive.
Sure. Okay. And sir, if you can give the split of consumable sales this year, this quarter and this year.
Shiva, I can take this question.
Please.
Yeah, hi. The breakup is for Q4, I'm talking first. It is 16% for the printer business. Consumables comprised 59%, spares 9%, and service 17%.
Pardon? Spares?
Spares is 9%, and service is about 17%.
Okay.
But if you want to consider the entire 12 months of 23-24, it would be about 16% for printers, 61% for the consumables, 8% for spares, and 15% for the service.
Oh, okay. And sir, you mentioned that our target is to keep our EBITDA margin in this range of around 25 to 26%. Am I right? I just missed that point.
No, I didn't mention anything like that. I said our gross margin range should be consistent at 60% or higher. And then the net margins depend on, really, it can fluctuate a bit quarter to quarter, depending on some.
That is okay. Yearly, what do we see? What do we,
because obviously, to maintain the current margins,
sure.
Go them, because the SG&A we feel should not increase as fast as the overall revenues. But, that's something we're still working on, because, like I said, in terms of cost, both the gross margins or the net margins, we have to, what happens every time we add a new line of business, we increase our expense.
Sure.
And, we need to, so on a standalone basis, we might get a better idea. On a consolidated basis, it might drop because those are still nascent businesses, which need to hit a certain economic scale to actually contribute to the bottom line and those margins.
And sir, just
sorry to interrupt, ma'am. May
okay.
I request that you return to
all
the
right.
question queue?
I will come back in the queue. Yes, thank you.
A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Naisal Parekh from Native Capital. Please go ahead.
Yeah, hi, Shiva and Jaideep. Thanks for taking the question. The first one is, on the investments that we've made in this quarter in the Europe, in the Control Print VV Netherlands. Can you just talk a bit about that? What's the thinking? And, are we looking at Europe as a market? And what's the strategy around it? Just if you can talk a bit.
So if I just get that question, because there are two different investments here. One is Control Print BV, which is our holding company in Europe, and then there's Markprint BV, which is the step-down subsidiary, which is an operating company. So can you just clarify this again so that Jaideep can answer this question?
The Codeology group that we acquired, and then we set up the Italy subsidiary as well. So my question is around that.
So first, I'll address the numerical part, and then the business part Shiva will address. So, yes, there has been substantial increase in investment. We got our SPV for the holding company, which is a holding company, the Control Print BV based out in Netherlands. And under that, we've got 3 operating companies. So one of them happens to be Markprint, which you are aware of that. So as per the management agreement, we've invested a further 5% into that company in this quarter. In the month of February, we've invested another about 1 million Great Britain pounds in Codeology Group Limited, and we've acquired 50.49% stake in that company. And as recent as March 24, we've set up a new company called CP Italy in CP Italy SRL, and there's a small investment of about 10,000 euros in that company. So Shiva would talk about the business foresight into that.
Yeah, so just getting back, of course, this is an important question, from everyone's point of view. Now, just getting back to Codeology, so Markprint was an existing, subsidiary of ours, and we've increased our stake out there. And that's part of our long-term expansion into the sort of coding plus area, which is, beyond the date code and batch code, where people want to print a larger amount of information on products. The second part was specifically with regards to Codeology UK. I'll just explain that. Now, Codeology is something we've been working with for about 15 years in the past, on and off. So we are well aware of the management team out there. First, they make one line of printers called the print and apply, and that's something that's not there in our existing business. So, of course, you might see in a lot of products, or especially on the outer carton, where they have a label applied. We print directly onto the products. We don't use the printers which print onto a label and then apply the label onto the products. And that's sort of a more specialized. There's some specialized techniques in there because of the label application and the whole integration of the print engine out there. So Codeology actually has a good market in that specific business. And so there are 2 purposes of this acquisition. The first is, in a very specific basis, to add the print and apply portfolio, a proven one, to our own product portfolio in India. The second part is that Codeology also feels that there is a market for our products in the UK, and they are interested in expanding some of their sales and expanding that sale of our products in their geographies. And they already have a good customer base where they can cross-sell this. And, of course, we already have a base out here we can cross-sell their print and apply. So that made sense, again, because of the comfort level of working with them for so many years and knowing their products quite well. So we've cooperated with them in a few different cases where also in the past. Now, the third thing, which is significantly bigger than the other 2 cases, is, the Control Print CP Italia SRL. That's the third investment we made. And that's a significant investment because beyond the amount we've invested, there will be a substantial continuing investment in that. And it's also a very large business opportunity. Now, there is a presentation that we would have released, an investor presentation. In that, there are some video links, and I think that will if someone can click on those and see what that product does, you'll get a better idea of what it is. But essentially, it's in the sort of single dose, single use, or single serve space. And V-Shapes is a company that has a lot of patents around the space. We already had a joint venture with them, and we decided to acquire the entire company through our Italian subsidiary. So we formed a subsidiary in Italy called CP Italia SRL, which is a 100% step-down subsidiary of Control Print BV, which is also 100% subsidiary of Control Print. So in the end, it's 100% owned. And CP Italia SRL bought all the assets of V-Shapes, including intellectual property and the trademarks and the customer base and so on. And we purchased that entire set of assets as a sort of whatever basis it's called, from V-Shapes SRL, and now it belongs to CP Italia. And essentially, we are planning to develop this. It's a slightly different line of business to what we do. So this is in the packaging machinery space. We are also in the packaging machinery space technically with our printers, but we're more on the printing side of the packaging machinery. This is more in the core packaging machinery to make single-serve, single-dose type products, which have applications in pharmaceuticals, in cosmetics, especially the higher-end cosmetics, and of course in certain lot of food, condiments, food, and certain types of sauces. So it can be used for any type of liquid packing. And also there's a development for a powder packing option, which again is only primarily for the pharmaceutical industry. So it's a sort of adjacent space that we're getting into compared to what our existing business is. And the scope in that is quite, like, the addressable market is quite large because there's a massive area of single-dose, single-serve. It is more expensive than, cheaper areas like sachets. It can be cheaper than certain other areas like, single-serve glass bottles or other types of things. So, but the space has to be created, for that. So that's, like a sort of, a longer-term horizon play.
Got it. That's very helpful. Is it possible for each of these three, can you give a sense of what was the revenue and profitability like for last year, and how do we see that going forward, and especially what additional investments are we looking at which we need to do, which you mentioned that we might need to do in Italy. So what additional investments do we need to do in each of these three subsidiaries?
So if I can break the question into two parts. First, if Jaideep can address your
Hello?
Yeah, Jaideep.
Yeah, the line is getting cut at parts.
Hello, Mr. Shiva? Sir, we are unable to hear you. I'll just reconnect the line for Mr. Shiva, sir. One moment, please.
Hello.
We have the line for Mr. Shiva connected. Please go ahead.
Yes, I'm back online. So actually, I got cut off for a minute there. But Jaideep was going to address the first part of the question, which was the specific revenue numbers I think that you guys were discussing. But approximately,
For the Codeology Group, it is about 700,000 Great Britain pounds. That's the revenue for them. For Markprint also, it's about 750,000 euros. And CP Italy is just started, like.
And if you can, for CP Italy, which we are planning to invest in, is there, like, we acquired their assets, but what was their revenue like? Is there any sense of what is the market potential like globally or in India?
So what happened was, like, in the COVID time, they sold a bunch of machines for hand sanitizers, and the revenue was something like the 12 million euro space for those 2 years, 12 million euros a year. Then it dropped to about 2.5 or 3 million euros because all those machines sort of went off. And it is a slightly different model because although it's a packaging machinery space, the material also has to be purchased through us because it's a proprietary, it's like a patented material also that has to be used. So it's a bit like Tetra Pak, where you get the machine from us. The Tetra Pak normally sells, but normally they lease the machines to you. But then you have to also buy the Tetra Pak packs from Tetra Pak. So it's a sort of different space in a way. So we also felt more comfortable because there was an innovation around it, was more technology based, and then it was a combination of a machine and an aftermarket, which is sort of where we felt we had some understanding of this area to that extent, rather than just a pure capital machinery sale. So the thing is, the addressable market is very large. What I would say is, like, the company started, honestly, in 2017 or 18, and then they had a big burst through COVID, and then when the COVID bubble burst, like, they got into some, and that's when we sort of tied up with them in the end of 2022. And then they got into some financial issues, and that's sort of where we got the opportunity to purchase them because they, like I said, they had a big base in certain markets, but then some of those customers and industries, especially in the sanitizer market, where they had a very large profitable sale, like that sort of collapsed very suddenly, as you can imagine. And then, the refocus was obviously much more expensive and taking a lot longer for them with a high cost base, which then, so the good thing is for us is they've cut their cost base because they had 47 employees. Now, when the time we purchased them, they were like, and right now they're 14. So the cost base, the amount of people and the size of the company has already been right-sized in a way. So it's very easy for us to step in without getting into all these like messy areas of, doing other things. And we bought all the assets we want without, dealing with any of the other past liabilities and, things and whatever those are. But the essential thing is, I think the business scope is quite large. Obviously, that's the reason we've gotten into it. So it could be significant because it's a large addressable market. In the end, the product is good. It's high quality, it's premium, it's innovative. But, it's like a marketing type of a product. It's not, there's no direct comparison, right? There's no, Tetra Pak created its own market, right? They're competing with glass bottles or with, HTP bottles or with pouches, right? How we get pouches of milk. So out here also we have to create our own market, if you understand what I'm trying to say. So it's very difficult for me to make predictions, but I think that the scope is significant. It is going to take 1 or 2 years for us to also get everything perfectly in place before we really see positive sort of profitability in this product. I think it's going to take 2 years, if you ask me, of an investment phase. I do want to point out that the material is quite expensive. There needs to be a major investment in improving the sales team, improving the coverage in multiple geographies, and there also needs to be a major investment in reducing the material costs because the material cost is on a per sachet basis is quite, a per mono dose basis is quite high. So that needs to decrease because honestly for the larger customers, the cost per dose, or the cost per pack is more important than just the capital cost of the machinery. So there's some positive things and some negative things. There's also one big issue that we have, which is the current mono dose is, the packaging material is non-recyclable. It's on a combination of aluminum and some other polymers. And we definitely need to come out with a recyclable option because, a lot of customers, especially in pharmaceutical, it doesn't matter because, they need the aluminum barrier properties. But definitely in the food and cosmetic market, there is, a lot more pressure right now towards sustainability if you look at it in a broader perspective. So definitely customers are putting a lot of pressure on us, not only in terms of interest in the product, but they also want a recyclable option. We do have some recyclable options under development, but even that will require significant investment to take to a commercial size. So I think reducing the cost of the material, developing the recyclable option, proving, getting all the certifications for that, continue to develop the machinery and, keeping that base alive, the technical knowledge base alive in Italy and developing a sales team. These are all significant expenses and investments. And I feel like it's going to take us, you can say 24 months maybe.
The amount of investments you would target to do, combination of maybe CAPEX, OPEX or whatever, but what over the next 1-2 years?
See, I don't know offhand, but I know just the, I think over this current year in terms of the entire sales, the entire OPEX budget, including R&D, which will be more than €1 million or €1.5 million would be R&D. In that, because we have to develop 2-3 other products in this range, including the material, would be about €4 million. Including the the entire Asia Pacific sales, including Africa, will be now run from India, and we are going to keep people in different areas. Europe will run Europe from Italy. But we need to add certain number of high quality salespeople, and in both the geographies, that's going to cost us a significant amount of money. More than €1 million, about €1 million a year is what I'm thinking, and €1.5 million for R&D. About €1.5 million to run the company as it is. With the people, the technology base, everything else. So that's sort of where you can take it as a €4 million budget to run. Secondly, we're looking at the material option. We're looking at multiple options. We're to source from some suppliers in a bulk commitment, whether to make a unit ourselves and some other things. So we have the technology and the formulation of how to make the materials, but it was not being made. And right now we are importing these materials from Italy, or from Italy it's being sold to multiple customers worldwide. There was also one other question I think that you had. So that part, like I'm still getting into much more depth conversations. I wouldn't like to put any numbers out there if because it is still tentative. So like we have some approximate ideas, but till we don't get like a final ballpark range, I wouldn't like to comment on that. And we've not even decided if we are going to go ahead with manufacturing of the material. We're going to outsource it entirely. We're going to how exactly this method is going to be, because that board meeting will happen in our next board meeting. We'll probably announce something much firmer on that basis once we all have a chance to discuss it and we have a chance to put it up. And just to give you an idea, so like V-Shapes last year did about €2.5-3 million sale, or like a €3 million sale or something. That was the size that they did as before we purchased it as CPL Italia. So I did that answer most of the questions, I think.
Yes.
Anything that...
That's very helpful. I just have one, follow-up to that is that, it seems like, one, it's obviously different, like you said, segment, different geography, and the amount of investment seems very high, right? So what do you think was the need what was the compelling business sense to do this? Because what you're saying is that the market needs to be created and a lot of R&D, etc., needs to happen, and this is obviously very different from our printing business. So what was the need for such a different and big diversification which would need so much investments? What was the thinking behind it?
Yeah, so the first option is that, like I said, we have our clarity quite, like at least for me personally, I have a lot of clarity that, we are, there are different types of businesses which are very good in this space. Like, there's Huhtamaki, PPL, there's, Cosmo, Polyplex, and those types of guys. And, they're more in the film business with relatively speaking, less innovation. So they're more, relatively speaking, please don't take me in the wrong way or anything like that, but they're more in a slightly more commoditized space, and they're making a certain margin. Now, with the way our company is structured is that we are in the printing space, we are expanding there. So the idea was that, we've sort of done what we've done in coding and marking. We are, like I said, in research and, development and innovation. That's sort of more where our core is. Like we started with something 15 years ago, and we've developed a bunch of other products, and we're still expanding, our product range on those things. So there is, like I said, I agree with you that the innovation is not in the packaging machinery. There's a lot more mechanical expertise required in that space, but we are getting people who have done it. If you understand what I'm saying, neither is the thought of ours to move the base from Italy to India. But I think we're comfortable being, personally, I'm much more comfortable being in a space which is more around innovation, more around IP, more around, like marketing, and you're creating like new needs for customers, frankly, rather than, just being sort of closeted in a very specific space where we feel that, like even though there might be less risk, but there's also like less reward. So, we definitely back our management skills we find out in the long term what the reality is. But we definitely believe that, we've got that capability of doing it. It's worth the risk. It's the reward is worth the risk because the scope is large. The second thing is, specifically I want to address that there is, I think because we were working with V-Shapes for about a year and a half, we have sold a machine, we have worked with them, and we have a fair idea of the interest in this product from customers in India. And that's obviously where the overlap was, because we are selling to the prime customers in India. We have like a huge customer base in the packaging space. And there is a definite interest in this product. It is meeting a certain need. Like I said, there is certain changes in terms of the cost of material, which might not actually matter. Honestly, like my feedback in Europe is the cost of the material is not so critical. They seem to be willing to swallow that slightly higher cost, In India, that cost of the material is quite critical. So, you can go maybe you can go to the 15 rupee sachet right now. If you get the cost of the material down, you can even target a 7-8 rupee sachet, and try to change a 7-8 rupee sachet to our sort of mono, like semi-rigid mono wrap type of a solution. So, what's happening is that the addressable market can increase significantly, but there is an interest, and, it's only after like sort of feeling that, or selling this in India, getting feedback from customers, understanding the market, at least the Indian market quite well. The belief is that there could be a strong demand for this product if this is done well. Like, of course, now the key thing is if this is done well, and there could be, but, so I agree that there's a risk element to it, but, in the end, if we have to do something new, there is always going to be a certain amount of risk. Like, even if we launch new printers in our digital printing space or whatever it is, like, in the end, I might, unless I get some customer saying that, I'll buy 23 of these printers at this price, in advance, which doesn't happen normally, if you create it, like, you have to still innovate in that particular area. So there is a risk versus reward. I know I'm taking a long time for this answer, but I wanted to, because this is an important move that the company has made. So I wanted to, clarify this in as much depth as I can.
No, that's very helpful. Thank you. And just a data point.
Sorry to interrupt, sir. Maybe request that you return to the question queue for follow-up questions, please.
Thank you. Sure.
Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Shreyas from Monarch Networth Capital. Please go ahead.
Hi, Shiva. Thank you for the opportunity. My question is related to, are you looking for some more acquisition this year?
No. So right now, I think we have our hands full. There is a second area that is going on, which is, because we've got a good product lineup of our existing coding and marking and digital printing products. We are looking at some geographical expansions, but not acquisitions, just like expansions, like minor, we might look at setting up 1 or 2 outposts here and there just so that we can sell in different areas. It might also help for our V-Shapes business that we've taken over so that we have, some areas where we can have a more direct service and setup center. So, but I think that there's no more acquisitions till we streamline V-Shapes to at least, a break-even basis, which, like I said, IMSH can take 24 months. But, so till that point of time, nothing major. I don't think it'll be allowed anyways, but, I wouldn't ask for something like that in any case. So,
and any capex plan?
That's there. And, yeah. Yes.
You told there is a capex plan, right?
No. I said we're still exploring it. There's a project that we're trying to report that I'm working on, because I need to understand, I think for the V-Shapes business, the cost of materials is a critical aspect. Like how in the Tetra Pak business, one is the machine you buy from Tetra Pak, but then, the cost per pack can also matter a lot in terms of the volumes. So it's the same thing in our thing. The machine cost is expensive. I won't get past that. But for the larger customers, the major customers, it's not a stumbling block. But for the cost of material, could be a stumbling block. So I'm just giving you an idea, like just on a hypothetical basis. If I was speaking to someone like say Marico, and they were looking at a single dose of some sort of like, whatever set wet gel or whatever those things are, and for them, maybe they can say that, we can afford 1 rupee per mono dose or per mono wrap, but we can't afford 2 rupees. And maybe right now we are at the 2 rupee cost per mono dose, just to give a hypothetical example. So we are trying to get as close to that viewpoint so that we can get into a much more bigger addressable space. So in pharmaceutical, the material cost is not an issue. It's just the marketing needs to be improved, and that's a sector we can easily target as of today in India, because the material cost is well within their budget. But if you want to get into the food and cosmetic space, like single serve honey or jams or Nutella type products or, all those sorts of things, we'll have to look at the cost of the material. There are multiple options here. We can try to outsource in a large way with a large commitment, do some other things. We can look at manufacturing in-house or through a dedicated contract package. So there's 2-3 things that are being worked out. Like I said, till I don't get the entire details sorted, I don't get a board approval, till we don't know what's happening, how we're going to move ahead, it's difficult for me to give any type of specific numbers beyond that. But I can say that, yes, we are exploring multiple options here.
Thank you.
Thank you. The next question is from the line of Devin from Marcellus Investment Managers. Please go ahead.
Hi, Siva. What's the profitability for V-Shapes and Markprint for the last year?
No, so V-Shapes was obviously purchased by us separately. So, I can only talk about what they... in fact, they were profitable. If you take out the interest payments, and you look at their cash flows, they were cash flow positive, maybe even to the tune of €1 million or something, even last year. Markprint was, I think, about break-even last year, if I remember right. Jaideep, approximately, I don't know.
Last year was a bit of aberration, but they still have a good GP margin, which is about 53%, which is in line with the previous period. What had happened is that they had about 2 months of some low-lying business. So last year was an aberration, so it couldn't turn into green last year.
Okay, got it. And for Codeology, what was the profitability?
For Codeology also, both these companies are based out of Europe. So quite frankly, they had a dip in the business for 2-3 months of the year. So Codeology also on a consolidated basis for both the entities, it's into negative right now for 2024.
I can say that with Codeology, our discussions were going on for more than a year. There were some issues with the tax structuring, and therefore the transaction was delayed by a year because of something to do with the taxes. I can't understand exactly. Something to do with some taxation matters, and therefore they needed to do some transfers, something or the other before, and then wait for some time before going ahead with this. And I requested them specifically that, assume that the transaction will happen and, go ahead. So we have been investing at a higher rate than what they normally would, and that could have also been one of the reasons for their slightly lower results. So with Codeology, I wouldn't look so much at the profitability last year because, we did request them to increase their size and scope of business. So they did hire some additional people and some additional costs they've undertaken, specifically in the last year. And it was with the knowledge that this transaction will happen whenever this taxation 1-year period or whatever happens gets over.
Okay, understood. And second question, Jaideep, this quarter there was a tax adjustment of 32 lakhs in Q4. So what was that regarding?
No, actually, we have some gains from the sale of investments. So, that actually was the reason. Other than that, our margins are still the same thing.
There was a similar tax expense in the previous quarter, right?
That you return to the question queue, sir. Follow-up questions.
Sure.
Thank you. Ladies and gentlemen, we will be taking one question per participant going forward. The next question is from the line of Naisar Parekh from Native Capital. Please go ahead.
Yeah, thanks for the follow-up. I just needed a couple of data points.
Sorry to interrupt, sir. You're not audible, sir. May I request you to use your handset?
Yeah, thanks for the follow-up. Just a few data points. One is, can you give the number of printers sold in the quarter year? Second, the tax impact was high in the fourth quarter. So what is the tax rate for the year is also high. So what is the reason for that? And third is, there is a 5 crore loss if we compare Concall and standalone. So Concall is lower by 1.5 crore. Is that loss is attributable to Markprint or is there something else?
Yeah. So can you just give me the first question? So I'll go question by question.
Number of printers sold for the quarter and year.
So for the year, it was about 2,859 printers what we sold. Hello?
Yeah.
And for the quarter, it's about 868.
Okay.
Yeah.
So it is a decline on a YOY basis, basically, right, on number of printers sold?
Yeah, it's a number of printers. It's consolidated this year.
So is there a loss of market share or is this just a mixed change?
Yeah, sure. You want to take this question?
Yeah, so out here, overall, if you look at the actual value of printer revenue has actually gone up. And the printers have gone down marginally. I mean, what we've communicated in our earlier calls is that, in fact, there was a question earlier about the number of salespeople and all of that. So, we are focusing more and more on the top few hundred, maybe top 1,000, 2,000 customers of India. So, we've been much less aggressive in pursuing smaller customers. And we are focusing more on big deals, big customers, because, we are successful in that. That's our core area. And those are the people who, don't mind paying extra money because they want 99.5% reliability, which what Control Print gives, versus 98%, which, some secondary player can provide, maybe importing from 95, 98%, some importing from China or, some other thing or whatever it is. So we are more in that top space with the more innovation, and we've changed our sales model. And, it's taking time because I can say the pipeline looks good as of right now. Of course, some people even asking some predictions for the year. I can't see anything what's going to happen because nobody knows what's going to happen in the future. But the pipeline looks good overall. And it's much more lumpy now because they're much fatter cases, but they're also like much longer gestation periods. So I do see sales increasing, past the previous levels, but also the value of the sale in terms of the amount of business it generates for us over the lifetime of the printer will be much higher per printer. And that's what our target is fundamentally. So it could be that there were 2,800 and whatever printers sold last year versus 3,200 the previous year, something like that. But these 2,800 printers are, more profitable and are going to give us a significantly higher business per printer than the previous 200, and so on. And the target this year is to increase the volume further without compromising the quality. So it's a bit of a learning experience. It's a bit of a change for us. Like I said, we've not ignored the small. We're not out of that. We're not exiting that market. But the focus is we have a limited amount of salespeople on the street, and we can't afford to spend too much energy on pursuing smaller customers. So the message is very clear to everyone that this is our core base, and you need to make sure that the core base is focused upon.
Got it. Jaideep, the next question was on tax impact.
Yeah, tell me.
The tax rate for the last two quarters is high, and even for the year is relatively higher.
Yeah, see, we follow Section 115 of the Income Tax Act. So, basically what has happened is that there have been some gains for the sale of investments. So that's as a result of that, the provision for tax, in fact, that has gone higher this year.
Thank you. Mr. Naisar, may we request that you return to the question queue for follow-up questions. The next question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Namaskar, Shivaji. Namaskar, Jaideep bhai. Sirji, thank you for this opportunity. Sir, I missed a lot of part of the Concall today, sir, because of some disturbance, so maybe I may be repetitive, sir, but just to put my question in a nutshell, with the type of investment, sir, we have done in innovative mark print and now the other assets, the profile of the company is very different to what Control Print has been known for to your investing communities for the last 2 years. And we have reached that scale and margin profile which the investing community has been anticipating. So kudos to the team for delivering steady set of numbers. And so we and also the coming forthcoming investors would also like to understand that how are these investments going to get nurtured and benefit us going ahead, since it's a sizable investment. And for the other financial aspects part questions I have already sent to Jaideep sir. Sorry if you have answered them during the call, I'm not aware. So this was the sum and substance of my question.
Jaideep, could you answer those financial questions, please? First, before I answer the rest of the questions.
Yes, Saket, can you just tell me the first question? I mean, the line is a bit hazy over here, yeah.
No issue, sir. Sir, my question
that Saket Ji has sent to you on email. Can you answer those first, please?
Yeah, so Saket Ji, I mean, you had raised about 4 questions. One was on, the increase in the additions to fixed assets.
Correct.
So, yes, it is true that we've done some sufficient additions to the fixed assets. Now, on a standalone basis itself, it's about 20 crores. And the main reason for it is that there's been substantial increase in the coding and marking machines on the rental basis for this year. It's about 13 crores approximately. Plus, one of the assets is now currently the V-Shapes machine, which we had purchased. So we had done a lot of trials on that. And after successful trials, then we have capitalized that asset. So that is about 5 crores. So roughly about 20 crores gets explained between these two additions. And we also have, the investment in...
Sir, one second. Sir, out of this 20 crore that you have capitalized, how are we going to benefit in terms of the revenue addition and the margin addition from these two assets?
See, Shiva would have already spoken about the value addition in terms of the V-Shapes packaging business. So what has happened is that...
Can you hold on for 1 second?
Yeah.
So, Saketji, the machines we put out on rental basis is when, some customers, instead of purchasing the machines from us, they don't show up in our sales numbers, but some of the larger companies now, they prefer sort of like leasing the machines on a per printer, like per code basis. And paying us on a per print basis or on a per machine per year, per line basis. So normally we enter in some companies in a multi-year contract basis, and and then we put our printers in their factories, and they expend it on a month-to-month basis for say 5 years. So it's the difference between like buying a car versus leasing a car for 5 years, and after 5 years you give your old car and you get a new car. So now the problem is the asset is in our. Suppose I'm an auto manufacturer, the asset remains in my book. Now, for whatever reason, last year there was a lot of sales on rent basis, rental, these lease type basis, or whatever you want to call it, lease rentals. And therefore, our book size increased by 13 crores plus just on that one individual basis. Then the rest were some other things, including a V-Shapes machine. But I think now, Jaideep, you can answer the rest of the questions, please. But
okay,
did you understand what I meant? Just to explain this first question, out of that 21 crores, 13 crores, is on a rental basis. Of course, those same printers will consume other things. We are going to charge rental or lease prices for them. So they will benefit us. You can consider them as an alternative, like instead of just buying the machine and buying the consumables separately, now they're leasing the machine and they're buying the consumables. It's like an alternative model to our existing sales process. But because of the way it is structured, the fixed asset of those machines comes into our book and then it gets depreciated. So it becomes a fixed asset we'll manufacture the machine, we'll convert it to a fixed asset, then we'll depreciate it over the life of the contract completely. And at the end of the 5 years, we will take back those machines, and that customer will normally sign a new contract sometime in the third or fourth year to take back these machines. And at the end of the fifth year, he'll replace with new machines from us.
Right. But how will the revenue profile and the margin addition will be from this contract, annual revenue addition, and thereby the margin?
So obviously there's some lease revenue, and then it depends on the consumption per printer basis. But in general, of course, we do these types of businesses with customers who are, you can say, high profile, customers, because normally we tend to prefer selling the machines. But so if we're doing something out of the way, then we want to try to get something extra.
Right.
So compared to our regular revenue and margins, it should be, technically speaking, extra. But of course, I cannot give you like a exact number we do it with. But it should be slightly better than our normal margins for sure.
Right. Yes, Jadid sir, please continue.
Yeah, so Shiva would have explained to you about the 20 crores for the fixed assets additions in standalone. Plus, as late as 29th of March, you are aware that we have purchased certain business assets of V-Shapes, which are now part of the balance sheet of CP Italy SRL. So there are about 18 crores has been the capitalization so far. So out of that, it comprises land and building, plant and machinery, and the patents.
Yes.
Yeah, Saketji. So does this help you?
Sir, I will take it offline, whatever I could not understand right now. The remaining questions also for the closing balance of investment and the cash and cash equivalent, I will take offline in the promise.
You can call me anytime, Saketji.
But Shiva sir was answering me, will be answering me the rationale, and now going ahead, the profile of the company would be very different than what the coding and marking work we have done, because now our acquisition are in foreign land. We are exploring new things, and we have invested substantially in those assets. So the investing community would be needing more understanding on the investments which you have made. And I congratulate you firstly on the presentation part, also Vinayji and the team also on elaborating on giving us some hint on how the current structure is. But more details and more understanding are needed to get an understanding how will we map the visibility of the earning profile of the company, and how are these assets going to accrue, create value to us. That is the sum and substance of my question.
So Saketji, as you must be known, because you are Kafi Concall, for a long time you've been an investor, and we appreciate it greatly. So like I said, Control Print is a coding and marking player, as you know. And, over time, we have developed more of our own technologies. And from being mainly a CIJ-only player, we have also developed some other products, and we're doing well in those other products, and we've grown our non-CIJ business. And therefore, we have, in the past few years, we've been able to grow slightly faster than the market, as you are aware. And we have gained a slow market share over the last 3-4 years, and we believe our product portfolio is strong, and we can continue to maintain that. But of course, nobody has seen the future, as you know. The second part, as you are aware, is that in the end, the entire coding and marking business last year in India was about between 2,000 and 2,100 crores if you add everyone.
Right.
We were 345 or something of this, or 340, 345, whatever it was. So we are already at about approximately 17%. Take it as 0.2, 0.3 here, depending on, what your expectation of the market, 2,000 hai, 20 crore hai, kya hai, size. So there is a limit in this market size, because in coding and marking for gate code, batch code, whatever, the amount we charge per print is like, like literally a paisa or something. It's quite low, if you understand what I mean. So there is a limit to how fast we can grow, because, it depends on how fast the volume of our customers grow. So basically what we did was we did for 3 different types of expansions that we've gone for. 2 which were extremely planned. One was to get more in the digital printing or coding plus business, where a lot of people want to print a lot more information online. So maybe they want to print the ingredients, the barcodes, other types of other things online, not just date code, batch code, MRP, or whatever the normal thing is. Get into higher resolution printing. So if you see things like code and stuff like that, where people are printing big logos, people are even going to do two-color logos now. We're even offering multicolor things. So we're offering those types of things with our QR code, other type of solutions out there. The second part is that we entered into the track and trace business with our software division, which we've also invested in the last 2 years. And now I feel, in fact, it's finally turning around. We're getting a positive set of feedback. We're getting a positive series of orders in the last few months. And now I would say it's a break even, if not contributing positively in the last 2-3 months. So that was a well-defined second step, which was part of our business, which was not only do people want to print information, but they also want to, trace the entire supply chain. So we are going far more deeper into the software side and the automation side out there. The third part, which we also discussed with everyone, was that we are looking at some geographies. We all agree that Sri Lanka failed, It was there by the time the business was growing somewhere. The COVID crisis happened. After the COVID crisis, the economic crisis happened. So we agree that things were a failure. But, then that doesn't mean Sri Lanka is the end of the world. And after some persuasion, of our board members and other types of people, we feel that, we are confident that we can adopt a light strategy, which is focused on some areas where we have a competitive advantage, and try to, again, look at some other countries in Asia, Pacific, Middle East, and Africa, where we can at least focus on some specific products where we've got a good advantage, and look at, whether we can increase some sales in these areas. So these were 3 defined areas which we had explained to you and to other investors that we are looking at, and we are working on it. And of course, it's taking some time because it's a time and investment, whether in developing a sales, a market plan, a sales strategy, and so on, to be able to address these areas. And the idea was that, although we are growing at luckily at a fair rate, because we've got a good competitive market positioning, we've got a good team in the Indian market, but in the end, the market is only so big. It's 2,000 odd crores or 2,100 crores. It's growing at about 12% a year. The GDP is growing at about 7% a year. Of course, if the GDP grows faster, this will grow faster, but we felt we could do this and do some other activities also. And we wanted to take these avenues to explore for the growth. So that was the thing that's happened. And this is where, something like Codeology has been added, because they have a print and apply system, which is of high quality. So we wanted to add that product line to our own portfolio of products. And this question was raised earlier. So the print and apply is a core coding product. We have not been in that area because there's a certain amount of mechanical expertise that is required, which is different from just inkjet expertise. And normally these are run on, thermal transfer printers. So again, more of a secondary product for us than a primary, sales-focused product. But it is part of our lineup, and it is, adding to our product range, because we already are selling these products to our customers. Our existing customers do have some demands of these printers, of these label print and apply applicators. So we're working on that. And that was one of the key rationales of investing in Codeology. With Markprint, it was a key rationale in going into the coding and marking plus towards the digital printing side, that in-between space. And we have developed some products on that. The Markprint products were quite expensive for the Indian market. But now we do have some products which we have developed off, the support or the expertise from Markprint, which can be leveraged in the Indian market. And we also have a better idea where Markprint products can be sold directly, which is frankly more in commercial printing, which is not more in our packaging space area. So we have to see how we can explore that area. But that's less price sensitive than the packaging space or the coding online space. And so we hope to see more results on that space in this coming year, in this financial year itself. both on the track and trace and on the coding plus thing. With Codeology, like I also said, adding their product line will take some time to integrate because there's a certain amount of technical expertise that's there. It's not currently, the mechanical level of expertise is not there in our company to that same level. So we are understanding, obviously, with their support, but we've just started this process. And maybe towards the end of this calendar year or financial year, we'll probably get a better idea of how exactly it can be utilized for some of the cases that we have or some of the customers that we have to address their issues on irregular printing objects, and even some regular objects where they want to label, they don't want to print directly on the product. And at the same time, Codeology also is interested in selling our coding and marking products, some of our product range in the UK market. And so there is a synergy there also. So that's the justification for that investment. But yeah, it was like a more simple product acquisition, and for them also for other territory opportunity where they have a good existing base in the food market out there, and maybe this could be a product sold to their customers. And then the V-Shapes business is a large market opportunity. It's a different business than what we do. There are a lot of challenges and investments ahead, but the potential reward is big. I have covered it earlier in some depth. There were a few questions on this topic, and I have tried to address that. So I think the easiest thing will be to, just see that transcript whenever Jaideep publishes it and read through that. There is a large scope out there. It's a different market, so there's no definition of what it is. But in general, the single dose market is a large market. And with our own experience of selling V-Shapes products in India, we have a reasonably high level of confidence that this is a strong product and there is demand for this product if done properly. There are definitely, the team needs to be strengthened, the sales team needs to be strengthened, the material costs are too high, recyclable material needs to be developed. So there are many challenges in this business. I don't want to hide away from this. It's going to take us at least 2 years, or not at least 2 years, but probably 2 years to put this into a, no profit, no loss business. But, even though it's an investment, I think the potential reward in this business, the potential addressable market is quite large. And, in my own evaluation, the risk was definitely worth the potential reward. So I hope I covered all those issues. But, so some of the deeper issues, especially regarding V-Shapes, if you read the transcript that Jaideep will provide shortly, then definitely you will get the full
Thank you.
answer on that for you.
Thank you, sir. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
So, from my side, first I want to thank everyone for participating. I know it's a very busy period, and I appreciate, people taking their time and some very thoughtful questions coming. I think that there were some, more talks on the acquisitions. I think it's a very interesting point, and definitely something that we're very conscious of. This is not a harebrained strategy where we've just gone and bought some stuff. Like I've explained, there are some markets we need to address. I think that I want to be honest, everything seems easier on paper, but it takes slightly more time to integrate and stuff. But we are seeing those benefits in V-Shapes, in the track and trace team already, and expecting both of them, not only in Markprint and in the track and trace, and expecting both of them to contribute quite positively in this coming year. So, just looking at that, I think it's going to take at least 2 years with V-Shapes because of the nature of the businesses and the challenges are bigger in scope. But we do believe that there is, it's a substantially positive opportunity for us, and we think that we can execute on this. We can, we can fulfill this product's opportunity.
Thank you.
Yeah, thank you everybody for being part of this call and look forward to your continued support in this year as well. Thanks a lot.
Thank you.